And we're live.
We're live, back again.
I didn't hear you say 1 or 0.
Oh,
So
sorry,
great.
I skipped a few.
Yeah, that's all
You know,
right.
on TV, we never say 1 or 0, right?
Yeah,
I
All
did.
right.
I didn't know that. So that's what Jeremy was doing. I didn't. I
Gotcha.
I didn't get the memo that we were getting rid of ones and
I,
zeros.
I was trying to be like a real professional.
Yeah.
Exactly.
There you go. So welcome back. We've been off for a couple of weeks. I've
Yep.
been
Yeah,
traveling all over the place. Just came back from Korea. That was a lot of fun. Uh, Posted on YouTube and in the newsletter a couple of my interviews out there. They're interesting. The one I posted this morning, they did it in English, but for whatever reason, they voice overed me. I don't understand exactly why they did that. Um, and I didn't really even like the guy's voice, but whatever. So market was selling off a little this morning, probably on the government shutdown fears. We've been writing about how that's probably going to be nothing, by the dip. Great day for crypto today. Definitely buy the dip on that stuff. What I think about the market is kind of the same that I've been talking about for a while. Accommodative Fed, massive AI capital expenditures. As long as that stuff keeps chugging along, I mean, I think you buy dips if you even get a dip. The moment we start to see capital expenditures pull back, then we risk a 2000, kind of 2002 moment. But, until then, enjoy the most hated bull market out there.
yeah, it just keeps on chugging, doesn't it? That
Any
trend
thoughts, Jay?
Yeah, it does. It's interesting to me that it's chugging with every single valuation metric at or near an all-time high. I mean, forward price earnings ratio is 23. It's just a couple ticks below the all-time high. Price to sales 3.3. The Buffett indicator, which market capitalization to GDP, is 217%. And we see some other obvious signs of speculative activity. We're starting to see some interesting weak spots in areas of private credit, like the bankruptcies of Tricolor and First Brands in the auto sector. And so I'm a little more cautious, not necessarily in the near term, because all of what you referenced before, 2000 and 2002, the Fed in 2000 obviously was tightening into the bursting of the internet bubble, and most of the major declines we've seen, if not all, were led by Fed tightening. Now, one could argue that the Fed's too tight. One could argue that they're not too tight. It's an open debate, but I mean, we're certainly overdue for a correction, I would think. When you strip out the earnings of the Mag 7, uh, instead of 13%, S&P 500 earnings are up 3.4% in the second quarter. When you look at the concentration, in the S&P 500, the top 10 companies account for 38% of the market cap. So, there are bubbly signs, but I, like you, I don't think we're there yet. But I am starting to get a little bit concerned about overall levels. Horrible timing tool to use valuations, but something to be aware of.
Yeah, no, I was going to comment on that and ask what you thought about all of these valuation metrics flashing. Because the way I kind of look at it, and we talk about this a lot, that I think the market has become so thematic. And you've got a whole generation of retail guys coming off of
Yeah.
COVID that are now involved in individual names. And then you've got Trump juicing, different names, different sectors that eventually I think valuation matters. But yeah, I don't think it's a good timing tool. I mean, I definitely don't think it's a good timing tool, and it wouldn't have been.
Yeah, and I think look, there's other stuff that I look at also that kind of there is a certain soft underbelly of the economy that isn't necessarily recognized. Jason Furman put up some interesting information about first half economic growth, that if you strip out investment in AI data centers and software, that better than or close to 3% growth rate that we're seeing is really closer to 0.1% in the first half of the year. And so you have a very concentrated area of growth. We're starting to see, as we saw with the ADP numbers today, job losses as opposed to job gains. You're seeing, you know, weakness in certain areas. Consumer spending is really tilted towards the top 10%. Mark Zandi of Moody's, who, some people say is Democratic, economist, but he did some good work on the composition of consumer spending. Top 10% of wage earners in the country account for 49.2% of consumer spending, and everybody else is either keeping up with or falling behind inflation when it comes to spending. So I'm trying to do the mosaic, as my old boss Steve Cohen used to say, and put all these pieces together and come up with a thesis. And like you guys, for now. And again, yes, there are sectors that are getting goosed and being supported. For now, it's hard to get crazy bearish, but I think it's important to kind of maintain and keep attention focused on these signposts that if something changes, if there's a change in Fed policy, if there's an external shock of some type, that's where you run into a situation where you just kind of hit a sinkhole that's somewhat unexpected.
And you brought up a great point. It's something that I've been thinking about and noticing for a while. And I'm curious whether you think from a market standpoint, I mean, from a societal standpoint, it matters. From a market standpoint, what I am noticing is you've got like two economies where if you're wealthy, you're doing fine. Everything's awesome. If you are not, you are underwater in a big way.
Yep.
And I think that's why you see some of like the political stuff, like what's going on in New York City.
Sure.
I wonder, does that come and bite the market at some point? And I know, the buy now, pay laters, the Affirms and the CarMaxes and things like that are eventually going to take a hit. But, does that impact, Google, Apple, Amazon, Tesla?
Well, Tesla, I think, Tesla, let's separate Tesla out because, the EV mandate's just gone away as of yesterday, right? So, our Mercedes dealership here in Englewood Cliffs, New Jersey, just threw $4,000 on top of the $7,500 credit until they cleared out all their EV and hybrid inventory, right? So there's things going on in that sector that are very much policy driven and not necessarily economically driven. And they're also behaviorally driven because Elon, made himself a less well-regarded character during this whole government experience. And so people backed away from Tesla in certain parts of the country. So that, I think that has to be taken at least separately, because if you look at the rest of the world, EVs are selling like hotcakes, right? So that's kind of a separate question. With respect to, some of the others, I mean, Google's weird because, YouTube is the most watched TV channel. They're pulling in tens of billions, if not hundreds of billions of dollars in advertising. They're safe.
Jeremy, where's our share of that?
Yeah,
Yeah, you guys should be pulling money in, right?
We got to monetize the channel first.
Jeremy,
so please like and subscribe.
See if the check is in there.
There you go. I'll take a look.
Yeah. But I do think this, what Heather Long, who's a guest columnist now at the Washington Post, but who moved to chief economist at the Navy Federal Credit Union just several weeks ago, brought up the reemergence of the K-shaped economy, which is what you were referencing. That if you look at how people at the top are doing, it's going up, and if you look at how people in the middle and the bottom are doing, their situation is deteriorating notably, and they're having trouble paying their debts. And if you look at credit card delinquencies, auto loan delinquencies, not quite mortgage delinquencies yet, but when you look at those numbers, they're getting close to recession levels. So you really see a hard split in the economy, which I think at the end of the day, all of the things being equal, will have some impact on the economy. If consumer spending rolls over, particularly among the wealthy, if they just stop spending for some reason, you'll see consumer spending start to be a drag on GDP rather than a support. And if that investment in AI, data centers, power generation, and software were to slow down, then you start talking about GDP going flat. Right now, Atlanta Fed has third quarter GDP at 3.9% annually. And so, but again, a lot of that is predicated on the notion that this investment in all these different in this particular sector will continue on.
Cool.
Yeah.
Hey, Pat, you want to introduce?
Yes, got it. I will, dude. Okay, so we have Ron Insana here, famously from CNBC.
We're just
He
having a
was-
chat until we get around to talking about who's
Yep.
on the show.
Oh no, he's famously from CNBC. I'm sure everyone knows who he is. For feather in his cap, Ron was named one of the top 100 business news journalists of the 20th century. Congrats, congrats. So,
Thanks.
Ron, we were just talking about some things here. Matt we have a newsletter. It's called the Heat newsletter attached to this. Matt made some comments this morning about AI. Is AI in a bubble, right? So, any thoughts on that? I mean, especially you've been around. So, how would you compare that to .com? Blah blah blah. We've talked about that a little bit just now. What do you think of all that?
I mean, I think that comparison is at least in part misplaced for a couple of reasons. When you look at the hyperscalers in AI, they are all making tens of billions of dollars, hundreds of billions in revenue, tens of billions, if not more, in profit. So it doesn't matter who you're talking about, whether it's Google, whether it's Meta, whether it's Nvidia, whether it's even Apple to a certain extent. They're all cash-rich companies. Now, if you go back to the internet bubble, which that was the peak of my career in a lot of ways. I mean, that's when CNBC was doing 800,000 viewers at 3 o'clock in the afternoon when I was doing street signs. We had 1,000 companies go public in the last 2 years of that century, in that decade, without products. They raised $200 million for ideas. They used that money to advertise ideas that hadn't yet to come to fruition, and blew up. And so while pets.com is always used as the example, and maybe not the best one. I mean, you had Zapata.com, which was a fish meal company that put .com at the end of it.
I remember.
Stock shot up. If you guys remember, most of the record company that
KTEL.
KTEL.
I was the broker for the KTEL, by the way.
So remember when they put .com up?
Yeah,
that
was my claim to fame, actually.
Yeah, and they sold crappy 70s music on TV.
The Kivas family, I know them all.
So, it was a different thing in the sense that it was cocktail party conversation. Like I could not, and none of us at CNBC could go anywhere without someone coming up and say, are you long Intel? Are you long Cisco? Are you long KTEL? Are you long Pets? Are you long, David Weatherall made, $1 billion with a holding company that only had one functional operating company within it. And so the froth there was very much different than the froth here. I think you can justify some of the valuations among the hyperscalers if they were to see a downturn for some reason, or if AI did not live up to its potential. If indeed artificial general intelligence is farther off than we think, and artificial superintelligence is a pipe dream, then you start to worry about what people are talking about. But the actual build out and deployment of this is better quality to a certain extent than what happened during the internet bubble. Even though everything that we talked about during the internet years has come to pass, just took a long time. I think the key question around bubbles is, have these stocks hit their terminal values relative to their future earnings potential? We knew that in 1999, I think, when the PE on the NASDAQ was infinite. Right. And, you really couldn't measure valuations at that point. The NASDAQ went up 85% in 1999. And then we've seen some similar types, if not even more excessive gains among individual stocks. I do think it's a little bit, I'm not saying it's different this time. I'm just saying we're not yet at that point where there's such a frenzy for anything having to do with AI that everybody's all in.
What are your thoughts, Matt?
I mean, I would echo that a lot. I think, and as I said in the newsletter, as long as the spending keeps up, as long as we don't kind of have that where's the beef moment where people are like, wait, where are the profits? Then, then I'm fine with it. If you get some of this stuff out of left field, you know, if the spending declines, if people are like, hey, we're not making any money on this, if AI turns into a dud, which I mean, I use it for so much now. I mean, I can't imagine it's not going to be a game changer and move into, you know, all the other areas, physical. Yeah. So
So,
I'm
yeah, I
not,
think the question around that, though, when you're talking about applied artificial intelligence, like, so we all sit around and use ChatGPT for research, or we use it for, different types of analysis, and presumably, in the legal world, they're getting rid of back office jobs. In the financial world, they're doing, the more mundane work with AI and eliminating jobs, increasing productivity, enhancing efficiencies, and saving money. The real question is, when applied AI companies start to proliferate and go public more than the hyperscalers, can they produce the types of profits that would support the valuations that will likely be afforded to them? And then do you start getting into a position where people are just buying everything on spec and praying that it works in a way in which the applied AI companies make money? We know the hyperscalers are making money, but they're making money in a lot of different ways, right? I mean, they've got
right.
multiple business lines going at the same time. So it's interesting to me that, it's both a positive and a negative. It's also, kind of hurting the employment situation, or at least it may, with respect to folks who spent the last 4 to 8 years training on how to code. And AI is going to be coding for, Nvidia and other
Right.
companies. And
Right.
so there's a macroeconomic impact that we have yet to determine how that's all going to shake out from an employment perspective.
Well, and yeah, and I see it here. I mean, I hired a guy last year to do some coding stuff for me. He didn't end up working out. I took what he told me he could do, put it into ChatGPT, and ChatGPT taught me how to do it.
And
Yeah.
then he
Look,
taught me. Then Matt put me on the podcast right after he fired me.
Yeah,
I'm doing
Pat,
LBO analyses on and company buyout analyses on ChatGPT, and it'll give me a full readout. It'll give me a spreadsheet. You don't have to know Excel. You don't have to know PowerPoint. It's leapfrogging skill sets that you used to have to be qualified to play in the literally play in the financial arena as an analyst or something. And so you say, okay, what's the buyout price for company XYZ? Well, here they give you the valuation. Say, okay, now run a regression, 5, 10 years out as to what my internal
Right.
rates of return are going to be, and it spits it all out inside of 60 seconds. It's
It's
a
super
great
useful.
tool.
Right.
Yeah,
So
but
I'm going to go
can
back to, let me stop, Matt. Let's go back to Matt's newsletter thing this morning. Matt, you also said something about Oracle selling 18 bill of bonds to fund AI data centers. I mean, like, what do you think of that too, Ron? Like, that feels like it tips the scale a little bit. This is bubble way.
Yeah, I mean, in fact, there's a fair amount of data centers that are being financed with debt, and so that's something that I think we need to pay attention to. Um, Look, most of the companies that are doing this have excess cash, and maybe they're borrowing at favorable terms, and kind of the same way they do stock buybacks, where you borrow the money to buy back the stock and expect it to
Right.
go up, and you think you're getting a bargain. Yeah, there's some bubbly activity. Oracle's interesting because, quite frankly, I'm not sure we're entirely certain as to what they're up to, given that Larry Ellison's funding his kids' aspirations in the entertainment world.
Right.
God knows how all that money is moving around inside of Oracle.
Right.
Um,
Yeah. We've
you
talked about
can't
that a little bit.
you
Let
can't
me
you
ask,
can't take it you can't take it from one pot and move it over to a personal pot. You can't really do that. But is he replacing money that he himself is taking out to fund not just the acquisition of Paramount, but maybe the acquisition of Warner Brothers Discovery, and then just filling a hole? Hard to say. I mean,
right.
it's not really an apples to apples comparison, but it I think it does paint a rather confusing picture as to how they're doing their financing over there.
yeah.
Yeah.
Speaking of Oracle, if anyone remembers, I think our last podcast we had Mayhem on,
Yeah.
and he talked me into shorting calls on
Oh
Oracle,
my
which
God. That thing's come back a lot, huh?
I even
no,
mentioned the price
I mean
target at 280.
that
Well, there you
ended
go.
up being very profitable. I'm out of those, unfortunately. I
Holy
should have held
smokes.
on to them, but I'm not long the stock. Um, looking for a spot maybe, but not long at the moment. But I am out of those short calls.
So if you ran Bollinger Bands on that chart, what would it look like?
Hold on.
Oh, good question.
Pat, you don't even know what a Bollinger Band is.
Isn't he like a shortstop for the Yankees?
Yeah, yeah, Pat.
Yeah, Cody, yeah. That was a great game last night. Jesus.
Oh man.
I'm a Red Sox fan. That was
you're happy.
Game last night. Cora blows Boone away.
It was such a leave Max Fried in, for God's sakes.
They were getting nothing off of that pitcher. How do you pull that pitcher?
I know Max Fried was throwing heat, and then even Khrushchev, who's throwing after 117 pitches, he was still throwing 100 miles an hour, and they pulled him, which could have been a mistake, but Chapman throws 100 and change, so probably a good decision. So if you were to do a Bollinger Band analysis, I guess 261's the spot to the midpoint that it would trade down to, and that's where you'd buy it then for a bounce.
Yeah.
If I'm interpreting that correctly. I worked with John for a long time at Financial News Network, so I was around when he created this stuff.
I think 287. So the 261 is the 50-day moving average.
Oh, is that what that is?
Right.
Okay.
287 is the midpoint of the Bollinger Band,
Okay.
which is right where we are right now. Well, now where are we? Yeah, we're right at the midpoint of the Bollinger Band right now.
So if you break the midpoint, you go down and touch the low point. And if you stop here, then you go back and tag the upper band.
Interesting. So that's how you look. So we had, I don't know if you know Tom Basso. We had him on. He's one of the old market wizards from the Market Wizards books, and he uses Bollinger Bands. He trades breakouts of Bollinger Bands, which I had never heard anyone do before. Thought that was interesting, but
when you clear the top band, the band has to reset. And so then you're either going to go up and tag the middle band on a rally, and then you test there to see what happens. And then it could go to the upper band again. It's two standard deviations on either side, as I recall. Yeah. And look, I think they've worked remarkably well over time. I think John really came up with something when he figured that out. That was back in the 80s, by the way, when those were developed.
Yep.
Yeah,
Wow.
I mean, amazing that it still holds, because most things people came up with in the 80s don't work anymore.
I think Jeremy met John Bollinger in a car wash once or something.
I
He
wish.
kind of still talks about it, right, Jeremy?
I wish.
That's Jeremy's hero.
He's on my bucket list of people I want to meet in my life.
He's a really good man. His
right.
daughter Chloe is running the business now. John's still doing his work.
I got him to reply to a Twitter post a while back because I tagged him.
All right. So can we move on?
Sure.
Or do you guys want to talk about this? All right. So,
Unless you want to do Elliott wave analysis of this.
Yeah.
not really. All right. So I'm gonna chop this up. Chamath Palhippothecia, right? Did I get it right, Matt?
I go so far back that we could do Gann angles, Elliott wave.
No, I got it wrong. Okay.
Bollinger Bands. Who else? Peter Eliades.
Donchin.
All these different folks back in the day, in the 80s when I first
Jesse
started, there
Livermore.
was the proliferation of newsletter writers from Joe Granville on.
Joe Granville.
Did
you know Dan Dorfman, by the way? You must have. Right?
Yeah, I worked with Dan for a period of time at CNBC, and so Dan used to do takeover stocks. That was kind of his
I
game.
love that, man. When I was a broker then, that probably gave me more. Dan Dorfman probably gave me more business than anyone else.
Yeah, because you guys,
ever.
you had an open line at 12:30 on CNBC in the middle of the day, and everybody would cheat towards the way he was talking.
Yeah,
lines would go off, and before you even knew whether he was bullish or bearish or a stock was a takeover target or not, you could see the volume.
You would have your finger on the button. Okay, Northwest Airlines, click.
We were never Northwest Airlines. Yeah, we were never really Al Checky going back to the 80s. We were never really entirely comfortable with that process,
Right.
Because of the activity it generated, and if people faded it the wrong way, it was
Right. Oh, it never worked, by the way. Or I wouldn't be working here. I wouldn't be sitting here if that worked, by the way. Just so you know.
Yeah, no, I know. And there was also, and with all due respect to Dan, may he rest in peace, there was a lot of single source reporting that was a little dangerous at that time.
Oh, I thought it was great. Highly entertaining. All right. So, Matt, pull up AEXA, right? This is American Exceptionals and Acquisition, SPAC this week by Chamath. You know, we have a guest on. It's called Julian Klimachko, right? He's a SPAC guy. He wrote something this week that said basically there are 194 SPACs outstanding. Of those, 121 are searching for a deal. Of those 121 pre-deal SPACs, just 4 are trading to premium to NAV,
Yep.
right? So, like, to me, if you know, again, I'm just throwing it out there. Like, if you're talking about like a bubble or whatever, that would kind of argue that there's not. I mean, you would think. I mean, right? Like,
Well, I mean, I think so. If you look at the percentage of SPACs relative to the IPO calendar,
yeah,
there's still more than I think 60% of the IPOs this year have been SPACs.
Yeah.
So there's a lot of activity going on. Listen, I've been approached a couple times about doing them, and I think it's early to tell whether it's bubbly or not, because you have to see whether or not they're going to ultimately find the acquisitions that they're presumably targeting. And so the bubbly part is that it's the bulk of the IPO market right now.
Yeah.
And listen, Chamath, I mean, I I I have trust issues with him, to be blunt, and his ability to bring successful SPACs public that will hold their $10 price. We've seen that fail on multiple occasions. And look, it's a tough game. I mean, and the rules are such that what I actually don't like about the rules is that you cannot go in with a predetermined target, which is kind of crazy, because if you're raising money and you can get several $100 million and lever these things into a multi-billion-dollar vehicle, you should know what you want to buy. I mean, I think just cruising looking for something to de-SPAC is crazy, in the private market area, because there are attractive private companies out there. And listen, the way it really works is you make up a list and you probably already know what you want,
Right.
but still, I think the rules ought to be amended so that it could be a more effective way of bringing companies public than having to go through all this stuff without the SEC asking whether or not you talked to a potential target before you made the acquisition. I mean, you do kind of want to kick the tires, I mean.
Definitely. And before you launch I mean, if you've got a target in mind, before you launch a SPAC, it would be good to know whether, that's a possibility or not. So
Yes.
yeah, I agree with you 100%. Just so you know, we run a SPAC ETF. So Pat, 2001 was a bubble. I will never forget February 15th, 2001. So to me, SPACs are something you earn, 5 to 7% on with some upside optionality.
Yep.
And we're sitting there February 15th, we're up 15% year to date. Part of me is like, wow, this is awesome. The other part of me is like, wait, we're way, one of the things I always tell people is if you're sitting there and you're up more than you should, at some point you're giving a lot of that back. And so that's what happened. I think now we've got a SPAC market. We still have way too many SPACs chasing too few deals, but I don't mind Chamath coming back. I think he brings, some attention to the space. What I don't want is like, ex-athletes jumping in. Unless they're additive, like, if you've got a SPAC that's going to buy sports stuff, yeah, bring Shaq in.
Yeah.
But, if you're going to do like, a crypto SPAC, I don't know that Shaq does anything for you. But
yeah,
if
and I think we've already
SPAC,
run through that problem, right? We've already run through that with Brady and with Larry David and everybody else. I mean, that problem's already manifest.
Enough of that.
So Matt, where are we like in the SPAC cycle? It feels like it's bounced around this year. Like it feels like the hype was like in April-ish. It felt like there was more hype. Seems like it's calmed down. Is that true, or where are we at? Where are we on that, Matt?
Well, I'll let Ron comment.
Oh, go ahead, Ron.
Well, no, I think it slowed down a little bit.
I didn't know if you knew all this. Matt follows it very closely. Just that's why.
Yeah, I have friends who are in the business, and they're still. One of them actually just pulled away from that to get into an Ethereum treasury business and converted his whole company into that.
Right.
From having done SPACs and other different types of acquisitions.
That's not a sign of a top or anything.
Well,
you want a sign of a top. So we launched 2X BMNR on Friday.
you did, huh?
We have 139 million in it right now.
Oh my gosh.
And
Wow.
it's already traded $72 million today. So we'll see what we end up with.
So what do you
Oh
guys
my
think about
gosh.
this? So I understand Ethereum as an on-ramp to blockchain, transactions. So that's my kind of core understanding of Ethereum's use case relative to Bitcoin and all the rest of crypto. I get why Ethereum is necessary. The treasury thing to me is an open question. Although, listen, it's not like I haven't been approached to get involved. What's your take on that? Because it's Michael Saylor notwithstanding, who finances it, I think in a dangerous way, using the preferreds that he uses and the way in which he assumes that there's no downside to the financing mechanism that he uses. Um, you see Dan Ives, a friend of mine, just jumped in with he's involved with Tom Lee, and they're getting more and more involved in WorldCoin and all the rest of this stuff. My past me has worried about a top, but I have been entirely wrong on Bitcoin since it was introduced. So
Mm.
from a price perspective, not necessarily
Right.
from a use case perspective. And it pains me that I went to my first Bitcoin seminar when it was at $100, and $25,000 would have gotten me out of.
Right. That
Well,
new boat you
yeah,
wanted.
I would have been in a different world these days.
Yeah.
I'd be doing something vastly different than I'm doing
We
now.
have to say that Matt owns the MicroStrategy preferred, by the way, Ron. Just
Oh
so you know,
yeah.
right, Matt? Or did you sell that?
I mean, I've got a little bit of it, but
Okay.
we have 2x long MicroStrategy.
Oh, yeah. We also have
So
two
yeah,
long
we got $1 billion in that. So
Are you
here,
guys in BITO?
we have 2x long Bitcoin, which is using IBIT, not BitO. I don't like the future stuff.
Well, no, BITO is the 56% yield. Have you seen
Oh,
that?
all right. So I just launched BITK, which is a 0 DTE on IBIT, and we use flex options because you don't have 0 DTE yet. But
So let me ask you about zero TTE, because
yeah.
the options volume now in the United States is true in India as well, but it's a different measure.
Yeah.
Options dollar volume in the United States now
It's
exceeds the
insane.
dollar volume of equities.
Yep. Isn't it like 9-1?
Zero DT volume's up like to zillions already.
Like
So that
over
means
in,
the public's all the way in, right? I mean, that's
right.
not just hedge funds and professionals.
Yeah, I mean that's a big mix of stuff. And it doesn't concern me from the standpoint that, there are a lot of things you can do with 0 DTE. Like I could take my entire portfolio and bet SPY is going to be up today, which I would argue is stupid. But, I run when I have time, and I usually don't. I mean, I run a hedging strategy with
Yeah.
0 DTE on SPY. We run for the guys at Tap Alpha T-SPY, which is 0 DT strategy on SPY. And I hate covered calls because I think
Okay, well that's why. Okay, I was going to ask you about that.
yeah, if you think a stock is going to go up, why would you sell a call on it?
I know.
But 0 DTE, I think, is fine. So, we run we just launched our 0 DTE IBIT. And Monday morning, IBIT spiked like 3 or 4%. And we didn't have a call on top of it. And we sold our call at like 940. If I'd come into Monday with a call on top of it, I would not have gotten all those gains.
Right.
We got all those gains. That's why I like the 0 DTE. So I think what we're going to see, so we do it with Flex. We're going to do it with Tesla, MicroStrategy, and Nvidia next week, also Flex options. I think at some point within the next couple of months, anything that's active on a weekly is going to have Monday, Wednesday, Fridays on them. NASDAQ, CBOE, they're already pushing for that. I think once you have Monday, Wednesday, Friday, I think we'll get 0 DTE on that. There's just so much money in it. And why not add a Tuesday, Thursday, on top of that.
And even a Saturday, Sunday, since coins trade.
I mean,
7.
Yeah, I mean, that'll happen. I mean, we're going to have 24-hour trading. We're already gearing up for that.
For the Texas exchange, they're going
Yeah.
7, right?
Oh yeah, we know all those guys over at the Texas exchange. They poached a bunch of our service providers. So they're all over there.
So just as a historical aside, when I started in the business in 1984 at Financial News Network, the market opened at 10 and closed at 4. There was a 15-minute virtually non-existent session on the Pacific Stock Exchange in case there was a tape bomb that came across after market. There was no pre-market trading. The futures, settled right effectively at the closing bell. They weren't even nearly as active as they are now. And I joked at one point when we'd gotten to CNBC that the job that we had was as close to a social service job as you could possibly have. You got in there, you did your show, 4:00, hard out, you were done. We were doing F&N from LA at the time. You were on the beach by 2:00, 2:30. You were done. And now it is, with crypto leading the way, it's a 24/7 business, and it's soon to be that way for equities as well. I mean, it already is, really, because you can trade Japan now, but it's hard for me. It's kind of, to a certain extent, it's hard to fathom that, because there's a certain gamification element that's entering into the process, and you have the younger millennials and Gen Z who are quite comfortable doing this on their phones versus the type of kind of having to show up in a physical location years gone by and stand and deliver. So we'll see how it plays out. I mean, obviously the technology's there. We're capable of doing all this, so I guess it makes sense. But having come from a 10 to 4 environment, it feels different.
Yeah, so back to digital asset treasuries. Here's my thought on it. So we're going to do 2x on a lot of them. I'm playing around with the idea of doing one, not because it's like hot, but in this we'll go into what I think of them, but as a way to get a crypto index out there, because the ETF regulations, I mean, we're in a totally different SEC environment, but the regulations still haven't caught up with the innovation. And trying to get a true crypto index in an ETF is still problematic. So I'm looking at a digital asset treasury as a way to back into that. Now, I believe, are there way too many? Yes. Are a lot of them going to go bust? Yes. What I like about them is not everybody either can buy a Bitcoin product or is comfortable. So one of the reasons I went out to Korea, they love our levered and inverse, but in Korea, you cannot buy spot Bitcoin ETFs. So they buy MicroStrategy like crazy. I can't wait to see the numbers of our AUM and BMNU, which is the 2x BMNR, how much of that is coming from Korea. My guess is it is going to be a lot. Wow. Because those guys can't buy spot Ethereum ETFs either, and they like to gamble. So I think as an access vehicle, I think I do think Ethereum and Bitcoin, if you're a buy and hold investor, is something that should be part of your portfolio. How much is going to depend on on your taste. For me, it's a decent amount, but I'm also hedging with options, and Bitcoin goes to 0, I'll be fine. Not a big deal. But that's why I like some of these digital asset treasuries, really just as a an access vehicle to get crypto in your portfolio if you don't have another way to do it.
And also, I mean, apparently also a gateway to the stablecoin world as well, right? I mean, in terms of what's being planned for the future of stablecoins and WorldCoin or whatever is currently being contemplated in the space.
Yeah, and we write about stable coins all the time. I mean, that's going to be a game changer. I'm not sure exactly how.
Depends who you talk to, right?
Yeah.
I mean,
I mean,
source of funds for the U.S. Treasury market, financing government deficits, all that kind of thing.
Big brother.
Yeah, a little.
Well,
Well,
yeah,
that's for central bank digital currency, right? I mean, that's
Well, it feels more Big Brother to me,
yeah.
actually.
So,
So can I ask you another question,
wait,
Ron?
hold
Go ahead.
on. Let me finish my thought. So what I launched a couple of years ago was the inverse 2x inverse regional bank ETF. And one of my theses, I mean, I think regional banks have all sorts of issues. Well, one of my theses is that, stable coins could end up putting a lot of these guys out of business.
Yeah.
I've been wrong. We launched it at 25. It's 10, 11. So we will see.
Well, there's an interesting piece in the Financial Times today about stablecoins disintermediating the credit provisions from the banking system and
Ooh, I missed
credit,
that. All right, I
credit
got
provisioning.
to look for that.
Yeah,
Right.
interesting piece, but it would probably affect this group more than any other, if that's the case.
Right.
Yeah.
Yeah.
Of course.
Yeah. All right. Next question. Yeah. So, Ron, I did a survey on my LinkedIn about Nvidia
Yeah.
being locked
Pat,
into.
the only problem is the only people who follow you in your LinkedIn are like your 5 friends.
No, it's not true. But having said that, Nvidia and like I asked them like, is Nvidia being in Taiwan solely or whatever, 100% relying on Taiwan semi? Is that a big deal? All of them said yes, right? All 3 of my friends said yes, and so I'm just wondering, like, what are your thoughts on that?
Well, I mean, look, it's certainly a big deal if China makes a move, right? I mean,
Yeah.
because then all of a sudden it's a entirely different conversation as to what, access to fabrication and so on and so forth. I mean, Nvidia does the designing, in case anybody doesn't know. Taiwan does the manufacturing. Do you always, do you, in any way, shape, or form, do you want to have all your eggs in one basket? Absolutely not. Does anybody else do what Taiwan Semi does and does it as well? Not yet. And so, look, I think, I sit in a different space with respect to a lot of this. I thought that the Chips and Science Act was the appropriate carrot to bring advanced manufacturing back to the United States and pull Taiwan Semi to the U.S. or any other, high tech firm that might want to, kind of plant the flag here at home. The tariff issue and Taiwan Semi today said there's no way they're going 1-to-1 manufacturing in the U.S. and Taiwan. So yeah, I mean there's some risks inherent in being entirely reliant on one manufacturer, and that's that would be true in any business, right? That's not just
Well, no, that's what I think the bigger issue is.
Yeah.
I mean, because my thoughts are, if anyone really thought China was going into Taiwan, this Nvidia wouldn't be trading at wherever it's trading now.
Right.
Or is there some weird discount that we don't really know about, Matt? Or what are your thoughts on that?
A weird discount? I mean,
Well, I
a
mean,
discount.
so what I'm saying is, like, no one must believe it's going to happen, and we talk about it
Right.
all day. But if anyone thought it was going to happen, or is it going to just be like falling off a cliff, tail risk?
Didn't-
Tomorrow we wake up and
No, but
Nvidia's
it-
down
it-
45%. Like, oh, we didn't know this
Yeah.
was going to happen.
right.
know?
I mean, it is a tail risk. I mean, it's the same thing. Is the market in a bubble or not? Maybe it is, maybe it isn't. Do you want to be the guy who's shorting a market that goes up pretty much every day? No, you don't. So,
So
yes,
you would buy you'd buy 2027 leaps, puts
Yeah.
on Nvidia because that's the target date for China to invade Taiwan.
There you
Right.
go.
Right. How much
And
would those be, by the way, though? I mean,
Probably
God.
nothing, right? I mean, they're probably
Oh,
cheap
God.
as can be.
As far out of the money as you can find them. Yeah.
I was thinking that.
Yeah, yeah,
I mean,
yeah.
you never know, I guess.
Or you can retire off that trade if it ever happens, right? But
Right.
sadly, the rest of the world would be in grave disarray because we'd be
Yeah.
sanctioning China and possibly even engaging militarily. So
So, Ron, I see you went to Chaminade, which
I
I
did.
drive by all the time.
no,
Love that
no, you
spot.
don't drive by my Chaminade. My Chaminade was in Canoga Park, California.
I know. I drive by that all the time. I
Oh,
live
what?
in
You're
LA.
you're out in LA?
Yeah,
used
yeah.
to
My
live in
kid
Canoga
plays
Park.
basketball out there all the time, so we go out there all the time. I knew someone who went there, so I drive by there almost like once a week. And you also went to Northridge. I go
I
down
did.
there a lot.
I lived in
Where
Canoga
are
Park
you-
for
are
a
you in
while.
the Valley?
Are you stalking Ron?
No, I'm
I-
actually, dude. I've lived all over. I mean, I live in Stevenson Ranch now, which is like the Santa Clarita Valencia, the next
next
spot.
Yeah.
But like, I used to go to that Y in Porter Ranch up there. Like I was like the best hoop player at the Y at Porter Ranch, trust me.
Thank God.
But anyway,
Yeah, we lived at a house when we first moved to California from Buffalo in 1974, and It killed both my parents have since passed, but we were looking at houses in the valley. My dad's family had moved to Granada Hills, or on Sepulveda. We were looking in Northridge, and we looked at a house at Porter Ranch that was probably a couple $1,000s out of our range. It was a 3 bedroom, 3.5 bath, sitting up on a hill in Porter Ranch for 49.5.
Right. That's probably
And
$1.3 million now.
Yeah.
yeah, and we didn't buy it, right? And missed on a huge. My parents missed on a huge opportunity
Right.
there. But yeah, Chaminade, which interesting. Chaminade was not the athletic powerhouse that it is today when I was
Right.
there. I mean, I was playing football as a backup quarterback my junior and senior year at Chaminade in 77 and 78. And
Right.
Elway was playing across the street from my house at Granada Hills High.
Oh, that's right. Yeah, that's right. That's
And
right.
Tom Ramsey was playing at Kennedy. And in the couple years prior, Anthony Davis and Ricky Bell came out of San Fernando. So you had this
Right.
just like, crush of guys that came out during that period. Some of us less skilled than others.
Right.
But yeah,
Right.
Chaminade's a great school, and they turned out a lot of really solid people.
Okay, so you're an LA guy. Everyone, nice. I think you moved there, but you're LA. You were in the entertainment biz. You've been around. So what is your take on like Disney these days? I mean, with the Kimmel and all that. I don't want to drag into the weeds too deep, but what do you make of all that? Like, it seems weird. Like, you can't win, right? You take them
Yeah,
off the air, people hate you. Keep them on there, people hate you. I mean, I know Bob Iger actually because our kids played in the same basketball team. We used to play at Cal State Northridge all the time at tournaments and all that, so I know him pretty well. But like, so I feel sorry for him, and he's a smart guy. But what does he
very
do?
smart guy.
What does he do?
Look,
Nice guy too.
yeah, he's a great guy, and then I, used to compete with his wife. Willow Bay was up against us.
I've met her a few times as well. Actually, she's a
Yeah,
nice lady too.
she's fabulous. Yeah, and yeah, I've known Bob for a long time. I think it was kind of a rock and a hard place. You have an affiliate revolt from Nextar, uh, Sinclair, and Tegna, where more than 30% of your stations are going to drop the show and threaten to kind of like walk away from the relationship. Then you had the public backlash about it, then that, and then you had 500,000 cancellations on Disney Plus, and you're like,
I think it's like a
gonna
million
kill our
two or
streaming
something. Actually,
business.
no? I don't know.
It was. I think at the end of the day, Bob did the right thing, and Dana Walden, who was involved as well, one of the senior executives at Disney, did the right thing by putting Jimmy back on the air. I mean, and look, as a member of the Fourth Estate myself for most of my life, I don't like people getting knocked off the air for particularly comedians. I'm old enough to remember the stories of Lenny Bruce and George Carlin getting arrested for dropping
Right.
F-bombs in clubs, and people getting knocked off for stuff like that. I'm not a
I do
fan
that
of
on the
that.
air, by the way, Ron.
Was that?
I drop those on the air too.
Yeah, well, yeah. I mean, it's funny. It's not that I don't use the word in 41 years of broadcasting. It's never slipped out.
Oh, dude, that's awesome.
Um, and my wife is constantly looking at me like, really, do you have to speak like that? Um,
Right.
but now my kids do as well, sadly.
Right.
But like I think no, I still like Disney. I like it as a company. I think they're good. Like all the rest of us in this business, um, are going to be challenged by a wide variety of headwinds going forward. I mean, the way in which media are consumed now. I mean, if you have Gen Z kids like I do, and they're sending me reels or they're sending me TikToks, and they have they'll still watch a movie. In many instances, they'll still watch some TV in a traditional way, but the bulk of their viewing really is micro viewing. And
Right.
so I think that these big companies have to navigate that, need to further figure out streaming. What really kills me, and I'll be honest about this, I think cable was the best thing that ever happened to television. And I'm clearly biased because that's been my whole life, my whole professional life. But when you think about the business model, which was either a double or triple revenue stream, you had subscription fees, you had advertising, and then in certain instances, both Financial News Network and CNBC in the early days would sell out the weekend to sponsored programmings, which at one point I think we were pulling like $40 million a year just selling out the weekend. We don't do that anymore. And you had these, just huge cash flow vehicles that,
Right.
unless you were a complete idiot, you couldn't lose money, right? I mean, you were making a 500 million a year pre-tax, and it was for a place like CNBC, it was just a printing machine, and I think what's going to happen is you're going to see streaming rebundled into some version of cable that's going to be just
Right.
far more expensive than cable ever was.
It almost seems like that. Yeah.
Yeah, I know it's weird, right? You think you're saving money, but you add them up, and it's like,
Oh
jeez,
my God, we got all of them. I mean, yeah, my
yeah.
wife and I were looking at each other the other day.
Like,
Said,
or
"Do we
everyone in
need
your
those?"
family has one, and so
Yeah,
everyone has like one, but no one has them all. I mean,
I have
all
them
right.
all,
Yeah,
and
yeah. Well,
plus
it's like
they're
you're paying
killing.
for them all, but you don't have them all. You know what I mean?
I mean, I can write them off, so it doesn't matter. But I
All
mean,
right.
it's like you can't password share anymore either. So
Yeah.
Oh,
you
right.
have to
That's
be
kind of
really
what I mean. And why?
careful
Yeah.
about all that stuff. Look, I think media is a fascinating business. I still think content is an interesting business. It's just the dynamics and the financials have changed a lot. So you have to understand the incentives and you have to understand where the upside actually resides. But look, Disney ain't going away. I mean,
Right.
their theme park business is huge. Their media business is huge. The movie business, I still think, is going to come back fully,
Right.
incrementally. We're not pre-pandemic yet, but they're starting to churn out enough movies again that are audience friendly that I think, we'll get back to where we were on the theatrical front. It's going to take some time, but
Got
but I
it.
think that business is rebuilding itself. And then look, the free speech stuff, that's going to be a big deal for a while to come. That's not over yet.
Yeah.
All right. One more thing. All right. Then anyone can go. 9/11. You have some story. You must have a story I've heard. And then, we
Yeah.
have our CMO is Chris Meek. He's involved with the 9/11 legacy, 9/11legacy.org. He does a lot of good stuff. I told him I talked to you about it. But so, and what are your thoughts on 9/11, or where were you? What happened? I kind of read you had something going on then. No.
Yeah, a little bit. And not it wasn't entirely intentional. I was having breakfast with a money manager and a hedge fund manager, and we were at the Regency, which is in Midtown Manhattan. And after both planes had hit, a gentleman who was sitting at the next table and must have recognized me from CNBC said, "You know that both towers got hit by major planes." And I'm like, "Excuse myself." Got in the cab, called CNBC, talked to the assignment desk. I said, "Look, I'm heading down Park Avenue. All our equipment was being moved from the New York Stock Exchange to the West Side Highway in Manhattan, which is right near the Hudson River on the opposite side of the towers from where I was." And so I get out down around Liberty and Park, and a MSNBC producer calls me out. He was on the street trying to make his way from the east side to the west side. So we were cutting across, and hopefully you can't hear that, but there's our lawn guys outside making a little noise.
That's right.
So John Zito and I were cutting across from the east side of the towers to the west side of the towers to get to our camera crews. And we were discussing the problems inherent in what had transpired, not just what we knew to be the immediate problems of people being killed, but also the notion that on the 85th floor, you can't put these fires out from the bottom. And they were too far from the top to use helicopters to try to put the fires out from there. So as we were talking about that, we were approaching the South Tower about a half block away. A chunk of the South Tower fell off the top. Huge plume of smoke blew out. We decided we were not going to try to cut across. We turned and ran. I ran around a corner. John kept running down the street. And as I looked over my shoulder, the cloud was rolling.
Oh my
And
gosh.
I ran around and squatted down next to a parked car, strangely parked perpendicularly on the street. And I just kind of plopped down next to it, and everything immediately went pitch black.
Oh my
And so
goodness.
I'm sitting outside this car, inhaling all this stuff, and it was getting hotter and hotter and hotter. And so I reached up to see if the car was unlocked, which it was. And I crawled in the back seat and just sat there. My wife was 8 weeks pregnant with my son, my second
Gosh.
child.
Goodness.
Had no idea what to do. Finally, it kind of like got gray. It cleared. That didn't clear up, but it was things were visible. And I went into a building. A bunch of police officers were in there, and they decided they were going to go uptown. We picked up some injured people, and I went straight to NBC, and they threw me on the air with Tom Brokaw and Matt and Katie, and I kind of relayed the experience. And I was covered in stuff. Was
Wow.
hacking up black material for an hour and a half. And look, it was surreal. I mean, to actually have seen it on the ground up close and personal, see people, flooding uptown to get away from it, People were crossing the Brooklyn Bridge to get out of Dodge. And then having gone through a series of other events that followed shortly thereafter. I was back there the next morning. Dick Grasso, who was the chairman of the New York Stock Exchange,
Right.
called me up and said, "When are you coming back down so we could talk about what's going on?" I said, "Well, I don't have access below Liberty." And he said, "I'll send a police car for you." And I went down and interviewed him on the floor of the exchange.
I remember
simultaneously.
that.
Yeah, with CNBC.
That was like a huge moment in American history, man. You were like right at it. That's
Yeah,
amazing.
it was. Yeah, it was. I mean, and for all of us who were down there, Rahema Ellis, Ashley Banfield, all of the correspondents who were down there, Maria, Bob Pisani, we're all down there one way or another, and at one point or another during the event. It's a weird thing from a journalist perspective, and I was, full time at that juncture, to be both a witness and a participant is a very strange place to be.
Right.
Because you're trying desperately to separate yourself from the event that you were just involved with. And the person who had the most impact on me during that period was Tom Brokaw, because Matt and Katie were great and they were cool and everybody was straight. And like you had to, no matter how traumatic it was and surreal that it was, one of the things about Tom, who was an absolute rock for 12 straight hours on the air, was you had to stay inside yourself. Like, to be
Right.
blunt, there was no losing your shit in front of a national audience after an attack on the country,
Yeah.
right? You
Yeah.
couldn't melt down. You couldn't have your personal emotional experience, relayed on TV. You had to tell people what you saw, in graphic detail, but stay within the guidelines in a real way, I think that Tom set, which was, we're doing our job, right? What you can go whenever you're going to melt down, you're going to melt down off camera. You're not. It's not going to happen here. And I didn't melt down till Friday. I mean, it took me another 3.5 days before I really lost it, and we just all were kind of pounding the nail through that experience. And quite frankly, at the end of the day, Tom came off at 11:30, and we were talking. We thought at that juncture that 20,000 people had died. We didn't know that the buildings weren't at full capacity, because had they been, it would not have been 3,000 people.
Right.
They actually mistimed the attack, which was, thank God
Right.
it happened that way.
Wow. All right. So we're hitting our minute, right? Well, you were at roninsana.com. Want to pull that up, man? I mean, this is a good spot for you, Ron, huh?
I don't even
Anyone
think I
wants to-
have roninsana.com, but that's okay.
Oh, it's on?
No.
Oh, what do you want to put in? Come on. Oh,
Oh, he does.
God, that is so old.
oh, it is.
That doesn't even exist anymore.
Where are you, man? Oh,
I'm on LinkedIn. I'm on Facebook.
Okay.
I'm on Facebook.
you got a Substack? He's got a Substack.
I've got a
that's still-
Substack, which Message of the Markets is my Substack, and so I write a lot about of that. I write frequently throughout the week, and the one thing that I really like writing is what I'm watching, so you don't have to, which is what I do every weekend, and do kind of a compendium of things that most people may or may not
There he is.
have access to. That's the one.
Yeah.
So.
I'll have to change the link in the description.
Yeah, we'll get that out there for you. All right. Anything else, anybody? We good or?
I think we're good.
So do you guys want to do an ETF with my name on it? And
I
can
would
monetize
definitely do an
myself, or-
ETF. I would definitely do an ETF with your name on it.
Do you have any, like, we
Look
need a
at,
cool symbol though, Ron. We got to come up. It's a symbols game now.
Yeah, I mean, I'll get,
INSN, the insane,
Yeah.
Well,
Do you have that one? Yeah, that's actually a good one.
Well, you're not
INSN.
Kramer, so
All right.
I'm sure he'd be thrilled that I'm doing business with you guys.
yeah,
We didn't ever got to that question. Matt says he's banned from CNBC. I
I
haven't
am
even gotten
banned
to that.
CNBC.
I would imagine that's the case. Yeah.
Yeah.
I have nothing to say about that. Obviously, I'm still employed there.
No, I know that's why I didn't bring it up. Man.
no
I-
comment.
All right. We'll see you guys.
See you.
All right,
Thanks,
thanks so much.
thanks for coming on.
Thanks.
Appreciate it.